All right, so welcome to today's weekly outlook. This is Astro's weekly outlook where we'll discuss trade our the upcoming trading week for the week second week of February. All right, so prepare your minds for an eye-opening session. We'll also discuss something else, something about psychology and yeah. So first off, we have to uh, get how the week is gonna look for us, right? And how do we do that? We do that by checking the uh weekly calendar. That's economic news calendar. So yeah, give me a second. So this is how the weekly calendar is looking, and this is what we'll be expecting for this week, right? Um, so tomorrow there's no news. So basically, it's going to be a low risk or low probability day. So even if there's any trade, you probably have to go in with lower risk. So tomorrow will probably be a no trade day for me. And then Tuesday there's news by 2:30. That's retail sales. So maybe we could have a manipulation on Tuesday. Wednesday, they're looking into Thursday and Friday, which is where heavy news events are gonna happen. So Friday is meant to be NFP, but I'm hearing that it's probably going to be on Wednesday. So you just need to keep your eye out for any adjustment during the week on the news calendar. So yeah, looking at this, our first trade day should probably be on like Tuesday. We'll be looking for opportunities in the market, right? To place ourselves in the right direction. Hopefully, market favors us from Tuesday. But this looks like a really good week. So let's go into the outlook itself, right? So we are looking at, let's start from the dollar. All this. So looking at this, right, we'll be looking for more continuation on how last week uh panned out. So now we want to see a reaction from this fair value gap, right? In here, it's looking fair value gap to see some sort of movement to the downside. So looking at this is what I would be most likely expecting. I don't think we'll be slowing down on shorts anytime soon, unless the dollar has something else planned for us. But we just have to be patient and place ourselves in the right situation. So same thing here on the euro. We want to see a reaction of this weekly fair value gap. We had a very good um, reaction from this other block here, weekly order block. So we want to see a proper reaction as it has touched a high time frame objective or PDRA. So now we have our draw, which is this high. We'll be looking for like buys to this high. I know like this week looks a bit scary, but like if you go down to lower time frame, just a little retracement into this other block, which makes it look this funny. But yeah, this is basically my expectation for the week. So let's look into back to the euro, sorry, to the dollar. So basically my idea for this week is to look for lower time frame entries in line with this bias, which is the sales here. So if we look at the daily, we saw after a few up days, we saw a down close day, which I'm not really convinced about it just because I've not really seen significant um breaking structure on the lower time frame. So basically, wow, what would move me to want to take a trade is probably seeing off the H4 because according to um in my strategy here, I use what we call weekly or time frame alignment rather. So from monthly to the weekly to the daily, then H4, H1, and 15. So if we're taking off PDRH from the monthly, I would love to see like proper structure from the daily, right? So that's what I'll be looking for. If we're on the weekly like we are now, our focus is on the weekly time frame. So we have our PDRA on the weekly, which is the weekly fair value gap, and we'll be looking to expand from there. So what I would like to see is like a proper H4 um, change in delivery that will support the idea. So ideally, I would want to see price reacts from here. But as it is the weekly open, right? As it's the weekly open, I will not really expect much because this PDRA was created on a Friday and in like dead zone. So basically the time that there's no much volatility. So this was created by um 11. That's basically London close, past London close actually. So there's really no much volatility here. So like I what we might see, right, would be this. This could actually happen. Then if this happens, I will like to place myself in this area for a move, right? I'll want to see some sort of reaction from here. I'll push price lower. Then we'll find an entry in the leg that was pushed lower, the displacement. I want to see like proper willingness, and that's in form of displacement. So wherever you see heavy candles, right? Like heavy down close candles, that's like the type of displacement I'll be looking for. So like here now, there's this push down. I like to see another push down, then a little retracement up into let's say like another block, a breaker block, or like a fair value gap for price to push lower. So once I see something of that sort, then I'll place myself around here to attack these lows, right? So attack these lows. Um, we have this too. So yeah, so this is basically what we're looking for. But since we have NFP by Friday, I would like to see this happen before NFP. And if this doesn't happen, right, we'll sit on our hands. I mean, personally, I will sit on my hand, just waiting. I don't want to rush anything. I don't want to put myself in any situation that I would regret entering, right? So this could happen. That's the first scenario. We could also have another sweep of this high. I'll most likely want to see this so that this would become a breaker block, right? I want to see this, and then this whole place would be like a point of interest for me. But this might not happen, right? But I'll prefer for this to happen so that I'll know that yes, there's literally nothing else holding price. We've seen a sweep, and then we've seen a displacement. We've seen a displacement, which means that there's an institutional sponsorship, right? Like sponsorship from the major banks and like big guys in the banks, right? So we'd want to see something like this to confirm our bias, and then we'll place ourselves around here. Basically, once I see a displacement and it close below here, I've already set my tool down, right? Right. So once this happens, once I see a close on the H4 below this, with proper displacement, I'll just set this as my high, and then probably just look for a 1:2. We don't need to catch the whole move, right? We do not need to catch the whole move. We just need a small portion because that's what you need. You don't really need the whole, oh yeah, I caught this 100 hour trade or like this 1 million hour trade. Like you just need something small. You don't need to catch the whole move. Like here, you can see like probably like five setups in this whole move here. You could see like two to five setups here. So you don't really need to force any trade, or you don't need to go heavy on any trade, right? So you can just take a little portion from that move, and then you're done. Nothing more. You have met your objective for that day. So yeah, I'll be looking for this, and once I see this, I will be very much happy. Because when I said this, then I mean there's no much resistance to price. Nothing is holding price again, and then we want to see it melt once this happens. So yeah, so that's for dollar. Let's go down to like SAH H4. Okay, sorry, H1. So looking at H1, this is the reason why it probably not go down, right? Because we've seen some sort of displacements from here. Best case scenario, if there's going to be any form of manipulation at all, we'll probably see something take off, sweep of NY's high. That's basically Friday's high, and then some sort of displacement downwards. So this is probably an ideal setup for me as well. So, but I basically want to see displacement first before moving in anything. So basically displacement of a H4 or like a high time frame objective. So right now we're in fair value gap, weekly fair value gap, right? So we want to see us attack these lows here. We want to attack these lows here. But we need to see displacement from this PDRA because we're currently sitting in it. So we want to see heavy institutional sponsorship into, let's say, from here. We would displace downwards to around here, and then we'll find our setup around here. So find a setup around this place here. Let's say once we close below this other block here, this down close candle, we'll want to place ourselves in the right position to attack these lows. So yeah, so let's look at the euro. So basically the same thing. I really do not want to see so much displacement, rather retracement from EU, because we're already at a weekly order block and we're still inside the weekly fair value gap. So this has already propelled price upwards. So I want to see like more continuation higher, right? I want to see more continuation higher and higher and higher and higher till we get to this high at least. So this is like a bias for like 2-3 weeks. So let's say this week now, and now that we have a swing high, what I like to do when I'm trading, right? Once there's like a swing high set, like let's say now from PDRA, we've seen a swing high form, then I always like to attack the swing highs or swing lows from the high time frame point of view, or high time frame PDRAs like this now. So we're going to attack this since there's a swing high. So the new candle will form here, and then we'll see probably like a push upwards. I want to see something like this. Let's say yeah. So I want to see something in this kind of sense, right? Maybe a little wick down here, and then a little push upward, then come and close down. So yeah, that's basically what I'm looking at. So let's look at the daily and how we can attack this. So now we have this this fair value gap here, which I would like to see violate, because currently it's holding price here. So we want to see this. It's not working. See. I so basically we saw this fair value gap push price down to sweep these lows, right? So I want to see price at least violate this before entering in any position. So let's say it close above this other block here, this fair value gap here. Then we'll start to attack like here, we'll attack here, here, and ultimately this high is here. So how do we do that? How do we place ourselves in the right position to attack this high? So we have to wait patiently. Like since it's a weekly PDRA, right? We have to wait and then wait for H4 displacements, which will confirm price. So what I would like to see, definitely like to see something. Let's say it reacts from here because um this doubles as actually a another block right here. Let me see changes. So and there's like a fair value gap there as well. So this should hold price ideally because this is already like high resistance, so it should not come back down. So that's why I really don't want to see. But like because this is the market open, anything can happen. We'll probably see like a gap down to somewhere like here. Take out all the sell orders or the buy stops here. So yeah, basically this is what we're looking for. Then once we see some sort of displacement, let's say we violate this fair value gap now on the H4, then I'll be looking for an entry. Let's say like once this happens, I'll probably set an entry here as well. Let's say like a long, maybe an initial position of a long here. Yeah, like this. Then I'm not even looking for much at all. Just quick 1 to 2. So usually I don't do more than 3 hour, and if I do like more than 3 hour, right, it's maybe because I added positions, but like the initial position is not usually more than 2 or 3. So maybe we attack this highs here. So that's basically 2.2 hour. So the reason why I use here as my entry is because there's an order block here. So which aligns with the tool. So yeah, so this is how it looks, right? So this is what I'm looking forward to this week. Hopefully the market gives us what we're expecting. So looking at this, we've set ourselves up for like a proper long week. And then now let's probably talk about invalidation, right? So I would not want to see price um violently close below here. When I say violently close, let's say now like something like this. Let's say we have this kind of candle here closing around here, a big candle closing around here, and then leaves like a fair value gap, right? For more downward movement. So once I say that, I'll probably sit down, that I'll sit my hands down until we violate, let's say, this other block here. Once we close below here, then I'll be looking for sells instead of longs, right? To attack here, to attack here, here, and here, basically. So that's what I will not want to see happen. So once I see something like a close below down here, I'll just set myself up for like sells. So let's say here. So yeah, this is what I'm looking for if our longs are invalidated. So yeah, that's what we're looking for on the euro. So now let's look at GU. So GU is basically almost the same thing, but it's looking way better than EU for longs. So we see proper willingness of price to move away from PDRA. So let's look at the weekly, right? Same thing. We're reacting off this fair value gap, and then we've seen some sort of willingness of price to move away from it, right? So what I would be expecting is another little retracement, just a little. So around here, then we'll look for price moving upward from here. So attack these highs, right? So once I see this, I'll be looking for placing myself around here and using a very not so tight, but like yeah, attacking these highs. I don't know even want I don't want to catch this whole move. I don't want to catch this whole high. Just one little portion of the market. I just need one win this week. One shot, one kill. Because I think last week I even had a loss from trading. You probably have to do a review of that trade too. So yeah, this is what I'll be looking for on the H4 on GU. So this will be my point of interest. So I'll probably set an alert here. So once price gets to this level, I'll be looking for like setups, right, to attack these highs. Basically the same thing from euro, like euro. So what pair would I trade this week? Which pair will be most suited, right, for the sells, rather for the buys? So we'll have to check euro GBP for that. So which pair is most suitable for longs, and how do you find that out? We have this pair called euro GBP, which is the combination of the euro and the pound. So looking at this now, it looks and it's clear to see that even though euro GBP is bullish, but at the moment it's bearish. So I'll probably be looking for, since it's bearish, means euro is weak, right? Once euro is weak, you will not want to take any long setups on euro GBP, sorry, on euro USD. So you rather take longs on GU since the euro GBP is weak. So yeah, basically we'll be looking for more long setups on GU because this will be probably my focus of the week. So GU will be my focus for this week. So let's look at, let's say, USD GPY. Basically the same thing. Now we've seen a very, very, very strong reaction from euro GBP. So what I'll be expecting is how we react off this BPR here, a buyer's price range. So let's see how we react off here. So will we get like some sort of push lower? Because this is what I would like to see, basically, to confirm my bias. Can you guys hear me? I just need, let me see if we're following. Okay, thank you. So basically, we would be looking for like lower time frame confirmation from this higher time frame level. So when I'm doing my analysis, right, I consider I consider sorry, I had a call as I attend to that. So yeah, we'll be looking for like same thing. When I say higher time frame, I usually mean the monthly, weekly, and the daily. So put this down in your notes wherever you want to take off setups, wherever you want to take setups from. If they're not from like any of these levels, it's best to just stay off the market because you want to, like, the banks don't work with lower time frame, like the institutions, they don't work with that. They usually work with the higher time frame because that's where there's clear bias, right? So you want to always place yourself in either the monthly bias, weekly bias, or the daily bias. So right now we're working with the weekly bias because it is clear to see that there's like a bias on the weekly. That's the only clear time frame on the higher time frame where there's some sort of bias. So, and then when you have your H sorry your levels, right? You want to pair them up with like other time frames. So now for monthly, you want to pair it up with the daily time frame. You want to pair up the weekly time frame with the H4. That's where you want to be seeing your structure, and like your PDR is where you want to enter off on the ex- ex- on the execution time frame. I apologize for my language. So yeah, basically you would want to place yourself in the H4 structure from the weekly. So you want to see something like, let's say, if for anything happens, right? We want to see something like this, a sweep of this high, aggressive move down, then want to see some sort of continuation from that push down. Let's say it leaves behind the PDRA. We want to see some continuation of that level. So this is the same thing. I'll be attacking all these lows. Um, yeah, so that's it. So I also want to talk about just a few things, right? We want to talk about give me a sec, please. Yeah. So while you're trading this week, I want to put your mind. I want you guys to test your mind. I want you guys to think about a lot of things, right? And one of the things I want you guys to think about is your attachments, right? What controls you, right? Are you happy when you're in profits, like when you make profits, right? Or are you happy when you don't make profits? What happens? Why are you trading, right? So you need to ask yourself the right questions. Why do I have to be right? Like now we have done the whole weekly bias. Now we want to see price do something, right? So what if price doesn't do that for you? What if like it just does whatever it wants? Because the market is always going to do what it wants to do, right? What happens then when you're not right? Why do you have to be right? What makes you feel like being right? Is it because of your ego? Is it because of status? Like there are like a few things, right? You need to consider when trading. How do I know that being right is what gets me rewarded? What if what when you're right, like it's actually going to be like detrimental for you? Like let's say now you have issues of like pride, right? And then when you are right, it just boosts your ego, and then you become a little cocky. You start to do um the wrong things, start to not do the things you were doing before because you were right, and you feel like every time I'm right and the market is going to do what you're going to like it wants you to do, right? I don't think that's the right mindset to go into the markets. You should not be thinking about you should not have that yes I'm right mindset whenever trading. You need to be self-aware, right? You need to be self-aware of the things that you're doing. You need to be aware that you are attached to money. I don't know if that makes sense to you, but like what specific things is holding me back or controlling me, right? You need to think about this. You need to put them down. You need to question yourself and then put it into perspective. Try to work out it and then fix it. So the first step to overcoming attachment is mindfulness. Once you're attached to money, like you need to be mindful of the things that is making you feel that way. So the first step is mindfulness. You need to probably have like a routine before going into the market, saying that okay, right now I'm going to trade because I'm trading to become a better trader, not because I want money from the market or the market owes me anything. No, that's absolutely wrong. So you need to also keep psychology journal. So I will want to task one of you or every one of you today to go watch this podcast. Chris Williamson. You just pick up any podcast and then anyone that feels right to watch, right? You should watch it. So I'll recommend Chris Williamson. So he's a podcaster that interviews lots of lots of people, celebrities, public figures, and they share about how um, their experiences have changed them, right? So you need to document how you feel before. Always do this. When you're trading, you need to document how you feel before, how you're feeling while you're in the trade, and after a trade. This will help you to manage your emotions properly. So once you see that you're getting too excited, then you have to check back. You have to step back because when you're excited, you want to add to more positions. That's one, over leveraging, and you are exposing yourself to lots of risk. So you ask yourself these questions when you're about to trade. So it does not matter what percentage you're trading. Let's say now I always stick to like a 1% to 2% risk. Like I don't risk more than that in the market. So when I'm in trades, sometimes the urge or like the temptation to risk more is there. So once I feel that, I just usually just delete it. I just clear trading view because okay, like let's say now the price is going really fast. There's a lot of displacement, and you're like, almost I have to pass my challenge, or I have to um, make more money. There's a lot of money to be made from this market. The market is moving in my direction. Yes, let me capitalize on this. And then before you know it, you add more or a lot of more risk than you initially intended. Then let's say just for a second, you see the trade reacts, say, oh, you see your small little profits, right? And then the trade just reverses on you. I'm like, oh my God, I shouldn't have done this. I should not have added position. I should not have started. But meanwhile, you felt that emotion before you even added the position. So what I need you guys to do is always be mindful of these emotions. You need to be mindful of the emotions that's going through you while you're trading. So you know how to mitigate it and like cut off the whole excitement, or it is um the I'm looking for the word. But yeah, you just need to manage your emotions properly, right? So is my current belief of serving me or holding me back in my trading? Is my current belief serving me or holding me back in my trading? So when you believe that you are the best, right? And you don't want to take any instructions or like any lessons from anyone, you'll probably be in a very bad position, right? Your belief system needs to be on point. Your belief system needs to be like, okay, yes, I want to learn. I want to know how the market works. So I'm ready, I'm prepared to listen and like watch the markets, do the right things, journal my trades, um, basically doing the right things that will make you become a better trader, right? So yeah, these are the few things I really want to talk about. I want to talk about these things because personally they used to attack like this. Sometimes they still do. Like all these things don't really go away, right? They're always still there. All these um, emotions while you're going through trade. I don't think there's anybody that would confidently tell me or anyone or say it out loud that they don't feel any emotion while they are trading. There is still that emotion, but how you manage it is very important. So yeah, you need to always follow your plan and manage risk. You always need to do that. So this week looks like a very promising week, and I hope that everyone that gets into the market will be able to manage their risk properly and follow your trade plan. So basically, your own outlook might be different from mine. You don't have to follow my outlook. You can follow yours. You can see how yours plans out, and then follow it. Stick to it. If you're wrong, you're wrong. If you're right, you're right, and then you move on. Then you don't need to attach any emotions to it, and then I guess everyone will be fine at the end of the day. So now I think it's time for questions. If you have any question, you can ask away. Yeah. Any questions, please? While we're waiting for questions, let's quickly do like a recap of what we've said. So basically, we want to see displacements either in the form of this here, coming out down. How do you know the currency pair to trade using the news? So basically, my focus while trading is usually on any of these three or four pairs: euro, pound, dollar, and yeah, those three. Once I see um usually I use this filter, right, to check out just those three pairs. So USD, GBP, and euro. So those are usually my focus for the week, and then it usually works that way. I don't know if I'm really even explaining this properly, but yeah, I use the USD for, let's say, euro, GBP news, and then because they are also paired with the USD, the news events boosts or like reacts with these pairs properly. So now, like I said, if I'm looking for, like, let's say for the news, right, it depends on whatever pair, whichever pair you're looking at looks more right to you. So now for like in this example now, euro looks more exciting to trade because there's more willingness and is reacting more from the weekly array than euro. See how weak euro is. Euro hasn't even moved as much as the pound has moved. So that's because the euro GBP is weaker. So you can see that it's weak. So for euro to expand to the higher side, it's going to be very low. It's low probability because of the way euro GBP is trading. And because euro is weaker than pound, it is more likely than that pound would buy, right? It's more likely that pound would be more favorable to place yourself in position for longs. So anytime I'm about to trade, right, I always check what is the euro GBP doing before I enter any trade. Basically, am I going to enter in a trade where if I want to long and euro GBP is selling, I'll rather long in GU than EU because euro is weak and euro will not have enough buying power as pound would. So yeah, I just hope that answers your question. Is there a significance in knowing the average daily range? And if yes, what's the significance in knowing the average daily range? So basically, what I use the ADR for, that's average daily range, is basically seeing if the day is overextended or not. Like usually we have what we call like how do I explain this now? What I use the ADR for is basically a checkpoint to see whether a pair is overextended or not. When I mean overextended, um usually there's like the average, let's say now, give me a second please. So the ADR is basically like the checkpoints, right? So when let's say I'm in a trade and the ADR has been hit, that's basically how much pips the trade or that pair usually moves in a day. So once we have seen it move is normal daily range, it's usually advisable to leave that market because it could reverse. Like now, see, this is the daily range of the euro for if you, or I think this was Friday. So this is how far, once you have your ADR on your trading view, you basically have like an idea of where price will probably not extend beyond. You get, sometimes it does move beyond that, right? Because um the market does what it wants to do. But basically, the ADR has like calculated the previous day's ranges and then like giving you an average for each day. So like now, once we have maybe tomorrow's open, we'll probably say ADR of like another 40. So the ADR could also could be here, so around here too as well. So you want to, even if you are looking for longs, right? You want to enter around the low of the ADR and then exit around the top of the ADR, if that makes any sense, right? But yeah, that's basically the significance. I just use it as a checkpoint basically to know when I'm going to just leave the market and stop taking trades. Or if I'm in an open position, either I break even, right? Because if my draw on liquidity has not been hit, it's either I break even or I leave the trade once the ADR is hit. So yeah, I hope that does that answer your question. Okay, in your execution analysis, do you have room for invalidations as as a company? Check the news, check for time frame alignments, check for setups, check for account for invalidation, setup feel safe. So basically, once I'm in a trade, right, and I'm about to execute anything, these things have to be in line. First off, my structure on the intermediate time frame, which is, let's say now, because we're using the weekly here, right? The intermediate time frame for the weekly is H4. So I'll be looking for proper structure and proper PDRAs that have displacement aligned with it to be in place, to be present at the time I'm about to take a trade. So I wouldn't want to be in a trade where there is like consolidation. Like now, look at here. If I want to long, I will not. It does not look like a nice place to long from here. It's really choppy and there's no form of displacement. Okay, now if there's like let's look at this now. So we had this sweep. If I'm going to long, right, there's this sweep here. And there's displacement, proper willingness of price to move higher. Once I see this is already 50% of my checklist done. There's willingness on the time frame that is, look at this, no, this is never H4. So looking at this now, there's pure willingness of price to move. Look at this displacement. So once I see this is basically 50% of my trade, checklist set up already. So I'll place myself in this from this fair value gap now, and then I would attack these highs. So once I see something moving along with the bias, right, I would always want to be in part of that setup. So for invalidations, I wouldn't want to see price close below here, close below those displacement levels. Basically, once I see displacement, I wouldn't want to see price now come back and violate those levels. So first thing I'll see as a red flag is if we close below the midpoint of this fair value gap. If I see a close on this H4 below here, I'm already becoming a little skeptical about the trade. When we see a full close below here, then I'm not even interested in trading. I'll probably want to leave or just take my L and go. So all these things I usually check for them once I'm in the trade. So from here, you want to see, let's say like M15, probably a shift in structure on the M15. Let's see how the M15 was in this case here. So it came down, swept these lows, right? Swept these lows, this low here, and then we saw an immediate reaction from sweeping those lows in the H4 PDRA. So that's one thing you need to see and like put down, because once there's a displacement from your H4 PDRA, or from your higher time frame PDRA on the lower time frame, then you should place yourself in a situation where you want to like be in that move. So yes, we would see something like long. So yeah. So we don't need to catch the whole move. Like I've always been saying, just need to catch a small portion of the move and just leave. So this is on the M15, but this is in the midnight, and I don't really take trades in the midnight. So once you open up the market during London session, we have this fair value gap. Price reacted from it and then created another block here. But me, I'll probably not even take the trade because this is not my own type of setup. So I'll probably have placed it below the day's low to be very safe. So usually my stops are usually at either a significant low, swing high or swing low. So now this is today the day's low. So this is where probably one of my stop will be. Then from here we enter this other block trade. Then yeah, so it move up. So this is probably like, you can call it hindsight, but yeah, it works. So is there any more questions? All right, guys. So in light of no more questions, I'll have to call this a great and blessed day. And yeah, happy trading week and stay safe. Thank you.